Hello, everyone. Good afternoon and welcome to the webinar, All You Need to Know About E-Invoicing in SAP. I'm Laura Parri and I'll be the moderator today for today's session. Our speakers today are Pachanok Klubkeu, Finance Project Lead at TJC Group. Hi, Pachanok.
Hi, Rhoda. Hi, everyone. Good morning. Good afternoon.
And we also have Richard Asquith, tax expert and CEO of VATCalc. Hey, Richard, how are you?
Hello, everyone. Glad you could be joining us on hopefully it's a lovely sunny afternoon where you are too, as it is with me. But still delighted to be on this webinar instead of outside enjoying the sun.
Thank you both. But you both have decades of expertise in tax and SAP landscape. And just as a brief introduction, TGC Group helps organizations to optimize their SAP landscape with data management and tax compliance solutions and consulting. And VATCalc are tax technology specialists for determination, reporting, and invoicing compliance. And before we begin the presentation, I'd like to give you very briefly a couple of tips. To make the slides larger, just click on the full screen button. If at any time you would like to ask a question, feel free to enter it in the chat, in the question box, and we will address them at the end of the presentation in the Q&A. And just to let you know, we will also be sharing the recording and the slide deck of this session. So in today's webinar, oh my God, I wasn't sharing my screen. I do apologize. Let me share my screen. I thought I was sharing my screen, but I wasn't. Can you see my screen?
Not yet, Rhoda.
Not yet. Okay. For some reason, I can't share my screen.
I share the screen. Yeah.
Can you share my? Yes. I'm so sorry. I don't know what something's not working in my dashboard. Yeah, please share your screen, Pachanok.
Yeah, I've shared it.
Little issues with live broadcasting. I can't see your screen, Pachanok. Are you trying to share?
Yeah.
Laura, the sharing is on. Currently, we are seeing the agendas, so you can
Yeah.
start.
All right, then I am the one that's not seeing the screen. I can't share. I can't see anything.
Let me start.
Yeah. Yeah. Please. Sorry about that. Handing over to you, Pachanok. You share the agenda.
Okay. Let me. Yeah. Today we will cover the first part for the regulatory landscape over the next 5 years, and then the challenges of implement invoicing in SAP system, and how to select the right solution for your invoicing project. Before we start with the regulatory, let me talk about a little bit about the global trend of digital tax compliance. So the digital tax compliance is moving from predict to real-time reporting, and the tax administration demanding the granular information. So you can see that with many countries now mandating invoicing, e-reporting, real-time reporting, and with that submission, the tax authority can preview the VAT returns. So the sort of truth now is moving from taxpayer to the tax administration side, and the role is also invert that business must reconcile the data that they submit and identify errors to mitigate the compliance risks, and also protects the bottom lines and the brand reputation. So why e-invoicing is growing rapidly? What are the main driver behind the tax reform? Um, in times like this, with high interest rates and low economic growth, alongside with the geopolitical tension, many countries are facing government's deficit, and also the rising of the debt levels. On top of that, there are also the urgent needs to tackle the emerging issues like the demographic transition and climate crisis. So to address the challenges, governments are exploring a new revenue source. For instance, the CBAM in Europe, the carbon border adjustment mechanism. This is one of the sort of the revenues. And when we look at the tax revenue structure, a big chunk come from a consumption tax, which is more than 30% of the tax total tax income. So this is why authorities are turning to invoicing to close the VAT gap. So Richard, we want to hear some of insightful or your thought about this key driver. Was the, for example, the personal income tax decreasing due to? Do you think it's due to demographic change?
Yeah, I think it's really interesting that you've called this one out because this is the one we're going to be hearing more about over the next 5 years, let's say. We all know about the VAT gap, the missing income VAT, and similar indirect taxes from fraud and other causes. But the big problem now that we're seeing that's going to be driving digital or reporting and e-invoicing is the demographic time bomb. So many countries are failing to replace their tax-paying populations, and I think particularly in Asia Pacific, you're starting to see some of the countries mentioning this as a rationale for driving through e-invoicing. So it's a perfect storm we're entering into with e-invoicing.
Yeah, that's true. Yeah. And we Yeah, so let's see what's coming next for the next 5 years. Um, we will see in this slide that the tax compliance landscape is shifting, yeah, really moving toward invoicing. We see invoicing is expanding across Europe, the Middle East, and Asia Pacific. Yeah. So let me highlight some upcoming, sorry, upcoming mandates. Yeah. In Denmark, the new digital bookkeeping system will be set to take effect in July 2024 for register system, and in January 2025 for a non-registered system. And this is mandatory for the system to support electronic invoice transmission and also sharing the bookkeeping data in the SAP formats. And the next country is Malaysia. I think many of our customers are now headache with Malaysia invoicing in Malaysia. It's mandate for both for all actually B2B, B2G, and B2C transaction in August this year for large taxpayer, and next year January for mid-sized company, and July 2025 for all. So in the Portugal, Portugal rolled out the B2G invoicing for small businesses in January 2025, and also introduced SAP accounting file for fiscal year 2025. Spanish tax authority had planned to implement e-invoicing requirement in 2025, but however, the necessary legislation has yet to be officially presented. And in Belgium, B2B invoicing will be mandatory for all taxpayers from January 2026, regardless of their tax turnover. Recently, Ministry of Finance in Poland announced the postponement of the mandatory B2B invoicing to February 2026 for the large taxpayer, and 2 months later in April 2026 for all others. This decision was made following the technical audit result of the KSAP platform, the invoicing public platform. And I think Richard have some insight to share with you in later. In France, also the another country, European country that postponed their invoicing mandate, and all the for the September 2026, all businesses must be able to accept electronic invoice, and also it's mandatory to issue electronic invoice, invoicing and e-reporting for large and medium-sized company, and then roll out to small and micro company in September 2027. The last one is for Germany. Germany roll out domestic B2B invoice between 2025 to 2028, and from 2025, business can opt to issue electronic invoice on a voluntary basis, and can adopt the mandatory invoicing acceptance as well. And it will be compulsory from January 2027 for the last taxpayer, and apply for all in 2028. So we will see more and more European country introduce invoicing application driven by the VIDA program. So Richard, do you have some news from ECOFIN meeting yesterday about the VIDA, about VIDA timeline and the requirements?
Yeah, sure. Just one comment before we move to VIDA on those updates. The other thing that I would say is that's changing across this slide. This slide shows us is the nature of the regimes that are being introduced. So what was happening in Europe, as Europe was starting to mimic the fathers of all of this, which was South America, is they're moving away. You can see this gentle moving away from what we would call government in the middle, whereby the government sits directly between a supplier and their customer on the invoicing process. So there has to be some sort of pre-validation. So that's the most draconian measure, and the one that gives us all the biggest headaches, because it fundamentally interrupts business. There's nothing in business. There's almost nothing more important than sending out your invoice so you can raise the cash. And some of the ones you called out, you can see that already. Israel, their new regime, which isn't strictly speaking invoicing. What it's asking taxpayers to do is to get an advanced invoice number, government-controlled invoice number. But you called out Germany. I think Germany is really interesting, because Germany is not imposing itself. It's not introducing a continuous transaction control, CTC, the acronym we all keep hearing about, where it steps between the vendor and its customer. It's just enforcing or mandating e-invoicing between businesses, and I think we'll see a lot more of that. Now, bringing us to VIDA, hot off the press almost. I think there's maybe the next slide. Yeah. So no doubt some of you will have heard this already. Yesterday, the member states came together, their finance ministers, to approve VIDA. This is a three-pillared set of reforms. The major one that affects this topic today and affects millions of businesses is digital reporting requirements. That was pillar 1. Now, the good news was pillar 1 was signed off effectively by all the member states. However, one of the pillars, pillar 2, which is related to accommodation and ride sharing platforms, Estonia put a stick in the spokes of the wheel and said it wants a compromise. We expect that compromise to be reached. The Belgians, who are the current presidents of the EU Council, no doubt we'll find a compromise. So we expect to get approval or agreement of VIDA at the next ECOFIN meeting, which is the 21st of June. But as you see there, there's two important requirements coming in from July 2030. So quite a few years out. The original plan, some of you will remember, was for 2028, but it's been pushed back.
Yeah.
And as you'll see, two different reporting requirements there. It's just for intra-community supplies. So typically that's cross-border supplies of goods and services. They're mandating digital reporting and e-invoicing. So in terms of deadlines, if you make a intra-community supply or some of the other marginal supplies that are affected, you must use an e-invoice based on the EU's standard, and within 10 days. Now, that's quite a close deadline. At the moment, it's 15 days of the month following the reporting period of the invoice. So that could be weeks, indeed months. It's been shortened down to 10 days. And then once you've done that, then you must digitally, separately report that transaction to your local tax authority within 10 days. Sorry, it's within 5 days. It says 10 days there, but it's actually 5 days. So 15 days is the new reporting deadline. Okay.
Okay, yeah. That's a good news that they at least they have a conclusion for digital reporting requirement, because not only for the business, but we as a as a service provider, we also have the
Yeah.
edthe. So yeah, you can see the diversity of the regulation across the different regions. Yeah. Richard, do you want to highlight for some country, yeah, for the different
Yeah.
substitution
Well,
model? Yeah.
yeah. I think this slide actually nicely summarizes the point I was making earlier. The differences. This is the challenge that you're essentially being asked to report your e-invoice or in a summary format the details of the transaction in many different formats. And what we're going to face is two problems. Terminology you're going to hear a lot about. Firstly, it's interoperability, and that means whether particularly if you obviously you've got a cross-border transaction, so you might have to report it twice under two different regimes. And the tax authorities are starting to become aware this is creating interoperability problem, which means can the data be exchanged between the tax authorities or between the taxpayer in a different territory, because the requirements are different. And things that will affect interoperability, it's if you have to register in a different country to report your transactions. How do you do that? Things like authentication, digital signatures on the invoicing. What data you're going to have to provide? Response to the data. What do you do if there's a rejection of your invoice? All of these factors affect interoperability, and the related cousin to interoperability is reusability. The more we see differences, and we see it nicely here on this slide, the more we see differences between countries, it means the taxpayers will have to set up different systems, and different systems means different analysts, different tax experts in the different legislation. And our real worry is that it's not something you just have to do at once, as each regime changes or tweaks their regime further down the line. So for instance, they start with B2B, but then they go to include B2C, or they include cross-border imports, exports. You have to reassemble those teams. So it's those two challenges this really captures: reusability and interoperability.
Yeah. Oh, something happenings in the US as well, right? I heard about the collaboration between the EU
Yeah.
and the US about the network, e-invoicing network.
Yes. Well, what is interesting now is we're starting to see a couple of platform standards emerge to help companies who are in particular facing multiple territory reporting requirements for e-invoicing or digital recording. And the big one that I'm sure everyone is very familiar with or has come across is PEPL. That was originally founded in the EU, and that's now evolved into a network, a standard that e-invoicing companies, agents, and taxpayers can all use to share e-invoices, particularly across different territories, and so it just makes it easier for everybody to be compliant in multiple territories. So it sort of standardizes the exchange of information. But coming to the US, there's almost, I'm not sure if I should call it competing, but it does feel like it's competing to PEPL. They have a network that's been hovering around for 3 or 4 years, DBN. And that's a group of e-invoicing companies and participating taxpayers as well. And they've set up this, it's a more modern network, and I think there was some friction about which protocols would be used. That's why DBN has set up itself, has gone its own way, separate from PEPL. But they are, as many of you will have seen, PEPL and or the EU and DBN have signed a cooperation agreement, so there should be minimal friction between exchange of transaction data between the two. But it'd be interesting to see if we see more networks being established.
Okay.
The good news is, the last point I would make is lots of the countries, and I think you probably say it, yes, you do, looking at places like Singapore, Germany,
Yeah.
they're adopting PEPL, which makes all of our
Mhm.
lives much simpler.
Yeah, and many countries I see they are moving, extending from four corner model to the five corner model, meaning that they can leverage data from what we have sent into PayPal network and then reuse it to send to the tax authority. This progressing. So so let me move on to the next topics that. And anyway, thank you, Richard, for your insight. But let's moving on to the challenges for the implementing invoicing in SAP. Yeah, let me cover some uh, key challenges here. We all know about the first challenge about the multiple regulation across different markets. Yeah, that for multinational company that you are operating in different regions. So this is it's challenging for the both IT and the tax team. Many times that they are facing limited availability to manage the additional request for the invoicing, and invoicing project is involved many stakeholders, and demand a special skill sets. um, what I have seen with our clients, that if they offer to use the several local suite providers, so they may encounter the fragmented local invoicing solution with different standards. And this require additional effort and resources for example, for the data extraction to fit into a template of each the suite provider, and also the maintenance cost. Yeah, hidden maintenance cost is often associated to the technical debt or non-standardization among them, and this become more evident when it's a time to uh, upgrade the version of the SAP or migrate to the S/4HANA. So you will see um, many things to think about, how to move all the technical debt to the new system. The third challenge is about integration. Many SAP customers are using multiple SAP system. You may have ERP, Concur, Ariba, Central Finance, or you may have external billing or accounting system as well. So the integrating to these the external systems poses challenges for seamless integration with those systems to manage the error, manage exception, and also the security aspect. Yeah, because a lot of data exchange between system, you may have to replicate your data into a third-party platform. That is security topics that we have to think about. And for the customization, that not all customers adhere to the best practice, and improper SAP configuration can lead to irregularity or non-compliance. And often adapting the invoicing solution become necessary to meet the business need and or the industry specific requirements. The data is always something that we have to manage during the invoicing project, because invoicing may involve additional information which is not currently available in the system, and therefore team needs to collect those data from the business partners, from customer, from both supplier, to do the data cleansing and uploading into the system. So how to manage to control data quality during the project and also post go live. The last topic I leave it for Richard. You are expert for tax and VAT, etc. So could you give
Yeah.
us the talk about the challenges for the VAT?
Yes, well, with all the energy and focus on the introduction of e-invoicing, it's really easy to forget why we're doing this or why the tax authorities are making us do this, to be clearer. And that's because they want to check your VAT or your supplier's VAT calculations on the invoice. And so it's really important that you've thought that through, whether you're sending out an invoice, have you got the VAT correct? Or when you take receipt of an invoice, whether the VAT on that was correct. Because the tax authorities will now know before you do, likely, and they'll have better analytics than you do to examine that. And obviously, they'll have the advantage of seeing your counterparty's view on the same transaction. So they'll see your vendor's invoice before you do, or vice versa. They'll be able to check what the suppliers have done too. So it's really important that when you think about all of this, you've thought about automation of either calculation of the VAT on your sales invoice or validation of the incoming VAT, because of the very tight deadlines and the EU's ones. I mentioned the 10 days. That's really generous compared to most countries. Most countries, it's live, and you'll not get more than a day to review this. So think about your tax engine technology or VAT auditing and how you can automate it. And that's obviously the part of the world that we live in, VATCalc.
Thank you, Richard. Yeah, couldn't agree more. Yeah, for the VAT challenges. Yeah, so we got some handy tips for you to take home. Um, the first is about this is a must. Yeah, before the project start, or um, as soon as we know a new regulation come ups, conduct thorough analysis of the local legal requirement. This is very important. Evaluate the business activity, invoice flow, and form that fall in within the scope of the invoicing mandate. Um, any new requirements to be included in the current form, any additional data that we have to correct from our business partners. Many countries are using a QR code. Yeah, that's just some of the analysis that we will need to do before the project start or during the project. And yeah, once we know that what are required by tech authority, so perform the data mapping and to do the data quality check. This is to ensure that all required information is available in our system, and we can um, manage to plan how to collect the data, how to clean the data with our colleagues, or with communication with our customer and the partner for the new process change. establish data master data governance procedure, because not only it's not finished after the project go live, it's ongoing activity to ensure data quality assurance. And when the project start, yeah, don't forget about stakeholder management. This is very crucial for invoicing project, for the implementation team, not only for the project team, but also um, all the stakeholder, the management, the operation, business, our customer, our supplier, what are they expect? We need to manage their expectation as well, apart from onboarding the resources into the project. And invoicing project is not a project only for IT team, but this is the should cover both a business team and also the IT team. So we can moving from a silo approach to synergy approach, engage our stakeholder, manage their expectation, develop communication plan in for both internal and external party. And also to analyze the impact not only on the system that we have to adapt, but also in the data process, people, all the aspect that we need to analyze, and then determine the action that require to change into the system, the what to do with the process, and also the adjustment for the organizational structure. The new role may become up for the invoicing, and who will take charge of that task. Um, and Number 5 about reconciliation, I think this is very, very important too. This is crucial when we talk about e-invoicing. Um, uh, to reconcile, not many countries they introduce not only invoicing mandate, but also with the e-reporting, with the SAP for audit, like you can see it like in France, in Poland, in Romania, they introduce both SAP and the invoicing. So ensure that all the data we submit, we send to tax authority are consistent among them. And of course, don't forget to reconcile with the VAT return as well. Yeah, and when we start the invoicing project, people may think about only the compliance, but take this we recommend that to take this opportunity not only to implement e-invoicing to comply with the regulation, but to go beyond mere compliance by identifying the opportunity that we can improve the business process, where we can automate to streamline the operation, to make the business user their life easier with the automation, with the business process improvement. And last but not least, after the post go live, is not finished for the invoicing, because the government continues to introduce a new requirements. The registration is evolving, so define the support structure for the post go live of operation. um, this is we have to keep in mind before going live. Provide comprehensive training, hand over to the support team to ensure that they can effectively monitor invoicing flow, manage any exception, to mitigate the non-compliant risk, and continue monitor the regulatory change to ensure that ongoing compliance is in place for to keep our company um, stay from the non-compliant risks. Richard, do you have any tips for uh, invoicing during the implementation um, regarding VAT? Yeah.
Yeah, I think go two points jump out as I was listening to you. So think about the reusability issue that I talked about.
Mm-hmm.
Try and replicate as much as you can across the different transactions. So, for example, what we've found is, and I still don't quite understand how this is possible, but when we were implementing, or when we were implementing for Hungary for their version of real-time reporting, we were able to migrate a lot of the processes over from the Brazilian team, what they'd done on Nota Fiscale. I still don't understand why Hungary has a vaguely similar relationship to Brazilian live reporting, but you get the point. Look for those similarities and efficiencies. And the other one, which you called out, I'm not sure if it's no, it's not in your list, is the VAT return. It goes back to the previous slide, what we're saying.
Yeah.
Do not forget why we're doing
Mm.
this. It's all about the correct VAT calculation. And as I mentioned, the tax authorities will be live validating your invoice, your version of recording live against your counterparties. But then at the end of the month or the end of the quarter, they'll want to know what ended up in your VAT return. It's really interesting when I talk to, I know quite a lot of our audience are on the IT side, but when I talk to indirect tax leadership, what they say is they think sending the invoice is 1/3 of their problem. They're really worried about what's going to happen around the VAT return when that's reconciled to the invoice. So obviously, talk a lot to the VAT team, indirect tax team. I suppose that's my, just thinking this through. That's my worry. Is traditionally this is tax reporting, and traditionally that's sat with the tax people who understood what the tax authorities wanted. But e-invoicing now is being, correctly is being adopted within companies under the leadership of typically IT or invoicing team, and rightly they do not know a lot of details about VAT, and that's where the troubles are going to come, post implementation. So as I think you said, make sure you've brought all the teams together and everyone feels they've got a voice at the table. So yeah.
Yeah, I think this is some of the project that the project team maybe meet some of the topics that we cover. Yeah, so this is to highlight. And coming to the solution for the invoicing, what SAP proposed, the offer for the invoicing solution. SAP or TJC, we had chosen the SAP document reporting compliance, or in short DRC, for to implement invoicing for our customer. And this is the solution is a global coverage. It cover not only for the invoicing topic, but also real-time reporting and the statutory reporting. It's cover more than 55 countries. If I'm not wrong, it's already 58 countries now, using by more than 3,000 customers worldwide. So this is a big a community that take we can take advantage of this network, that we can uh, exchange the knowledge with our peers. From SAP also provide a regulatory manager application that help the customer keep up the new local legal requirements. Then also along with the impact and the roadmap for to deliver the solution. And also VATCalc and TJC, we have published a lot of blog and text news. So visit our website for the regulatory chain as well. And it's it fully integrated with the SAP system, and also support for S4HANA migration. So make sure that the solution that you are going to select is it not have any issue with the integration with the SAP. This is with the SAP DRC, we don't need to manage the data extraction because SAP DRC manages um, through the business document posted in the SAP ERP. SAP DRC can capture all the required information from the authority, and this is the based on the configuration, no hard code, and this is can ease the efforts on the IT side. So we don't need to worry about reconcile data between our ERP system and on the e-invoicing platform. Yeah, and the security compliance is make sure that the solution it comply with security standard that required by the governments and also in line with your organization security policy. And to DRC also minimize the IT effort to manage extra work for example, to set up iDoc, to set up the EDI on the SAP system to feed data to the invoicing platform, because this is thanks to the fully integrated the solution with the SAP and the SAP DRC. So the solution also can be integrated with AP automation solution. Many country or our client, many client that in Europe that they are using this kind of solution, and the DRC can integrate with your AP automation solution. This is to help you to leverage your existing investment of the invoice verification process. And the last topic is about the customization. We can extend the DRC solution to meet industry specific and business requirement. Yeah, so we we don't have enough time to show the demo the system, but we have this information for your for sure the resources for you to for reference, a lot of links, useful link from the SAP. Yeah. Okay.
Yeah, Pachanak. Thank you.
Yeah, Brara.
Yeah, so very briefly, here's a little bit about TJC Group. We've been around for a long time. We're a long-lasting SAP partner with expertise in consulting and software in data management and tax compliance. We provide services for data archiving and ILM, data privacy and data deletion. And then for compliance, beyond e-invoicing, we also provide services for SAFTI compliance, data extraction for tax and audit, and the VATCalc compliance. And finally, we also cover decommissioning of legacy systems. And if you were to implement SAP GRC with us, then we would be able to help you in 3 ways. The project scoping is an initial assessment, which is crucial, as we've seen with our customers, because it's the best way to understand the local regulations and SAP GRC functionality in that country. And then we develop a fit gap analysis and an invoice analysis. Then we would move forward to the implementation, which of course we make sure that everything is up and running. We monitor and control the implementation phases with SAP quality gates. And finally, if you were to need ongoing support, we would provide AMS services to make sure that SAP is basically operating optimally. And a few takeaways from today's session to wrap up. Thank you, Petanak. So first and foremost, we've seen that invoicing is on the rise, is unstoppable, and it comes with a number of associated challenges, as Petanak has explained. So the best advice would be prepared, preparedness, to be better equipped to cope with future challenges, with potential problems. We've given today some tips that hopefully will be of use for you. And in terms of the the software, our recommendation is to go for SAP DRC because it's the best fit for compliance and for integration with SAP, as well as for global coverage. I think you mentioned, Pachanak, that it's covering 58 countries at the moment. So yeah, few takeaways for today, and now it's a time for the Q&A. So we had a couple of questions on the chat. The first one says, if we use SAP DRC, we would still need to connect to a network via a service provider, such as, for instance, Spaghetto, or can we connect directly?
Yes. Yeah, SAP DRC can connect directly to the government portal, or also can connect to the PEPO network. If we can bypass the service provider, no need to connect to, no need to connect to the service provider in order to submit the electronic invoice to tax authority. Yeah, we can send it through SAP DRC.
Thank you, Bachanak. We have another question. This one is about the implementation. So how long would an invoicing implementation take on average?
The timeline for implementation is different depending on the complexity of the local requirements and also the customer system landscape. So it based on our experience, typical timeline for the uh, implementation for one company, it would take 4 months plus 1 month for the hypercare. Yeah.
Thank you. And I have actually a question for Richard. If you don't mind, it's if is there any chance of BIDA being delayed further?
I don't think so, or almost certainly not. I wouldn't bet my house on it. I might bet yours, but I wouldn't bet mine.
That was very clear. Okay, and we have one last question, which is, will the UK introduce invoicing anytime soon?
No. The UK remains very Scandinavian in this field. I characterize this for a lot of the North European countries. They don't have big VAT fraud problems, so they don't think it's justified. So, like countries like Denmark and Finland, they may impose the right for you to insist that your customer or your supplier does e-invoice, but there won't be a widespread mandate the way there is in Italy or likely in Spain following South America. It's essentially only when there's major VAT fraud problems. So no.
Okay, thank you, Richard. One more question, if we have time. Can multinational companies working in Africa, for example, in Senegal, pay tax using SAP tax compliance to avoid tax evasion?
I'm not sure I get already get to this question. Yeah. Could you repeat again, or Richard, could you
It's
help for these
it's quite a
questions?
long question. Yes, it's if multinational companies working in
Mm,
Africa,
yeah.
for example, Senegal, pay tax using SAP tax compliance to avoid tax evasion.
Is this about a solution for SAP solution for tech compliance? Where we, yeah, where sorry, this is maybe we can
Mm,
connect to get
We
more, or you can elaborate more in the question
Yes,
box.
I think
Yeah,
we can connect with you, and then
yeah.
we'll definitely try to answer that question and find out more. Uh, there's another question just popped in the chat. Why not selecting a local provider instead of SAP DRC?
Yeah, if you are implementing the first invoicing for the first country, maybe local service provider could answer your question. But if you are a multinational company, if you have to roll out to many country uh, with the different standard from local service provider, think about your IT departments, how they have to manage with the multiple service provider with the different standard. Do they have to extract data from SAP with create the custom program to feed the data? Uh, but with the SAP DRC, you don't have to worry about that. This is SAP will manage that. You just do some configuration to map what transaction in the scope of the invoicing, which document type with the tag code, yeah, and any others the parameter that we can configure. Yeah. So this is, I think this is one of the most important point that I think SAP DRC is. This is why we choose SAP DRC actually for our clients because before implementing invoicing we do some research. We analyze all the invoicing solution, yeah, and finally we come up with the SAP DRC solution.
Yeah, I'd
Yeah.
echo that. It possibly is the most important point. The world is full of companies who 4 years ago, 5 years ago, when Italy launched with its SDI and Spain with its SII and Hungary, they went local and they found somebody cheap. And that's the problem with local. You'll always find somebody super cheap. But then, as we've seen inevitably, pushed by VIDA in particular in Europe, all countries in Europe will impose some sort of e-invoicing, and you do want a single platform, even though it might feel a big investment, a big call on all your resources and attention, but you will regret it if you end up with multiple different local providers. Because trying to support them, trying to maintain them, they'll report in different ways. You'll have all sorts of reconciliation problems too. So yeah, I'd underscore what Pachanu just said there.
Thank you, Richard.
Okay, thank. One last question, and I think we have to close after this one. It's why we should select IMS after a successful implementation of SAP DRC. What would be the benefit?
Oh yeah, the benefit for the AMS actually this is to um, address the challenges after the go live that invoicing it need um, immediate attention or the action that required because you have very short timeline or the deadline to send to submit the electronic document to tax authority. So either build the team or your support team internally to manage invoicing, or leave it this task for the expert to do it, and then you can have your free time to work on the strategic tasks or any other value added tasks, yeah, to for your daily operation.
Okay, thank you, Pechanok. Thank you, Richard. Thank you, everyone, actually, for attending this webinar. That concludes the webinar. We will reach out to you, those that we couldn't answer your questions. And just as a reminder, in the handout section, there are a few more resources for you to download. And of course, we will be sharing the recording and the slides of today's webinar. And there's a short survey when you leave the webinar. And thank you all. Have a lovely afternoon or morning, if wherever you are. Thank you. Bye.
Thank you, everyone. Thank you,
Thanks.
Richard.
Bye.
Bye bye.
Bye. Thank you.